Welcome back to another episode of the MD Investor, where we talk personal finance, increasing our financial IQ, teaching our children so we can break the cycle of generational poverty. Today's episode, we're going to talk about cash flow. We're going to talk about cash flow. Cash flow is very important. Why? Because no matter how much knowledge you have financially, you can do nothing with it. No investing, no growth, no compounding, no doubling your money. If you're broke and you have no money, seems simple and fundamental, but it's a fact. It's all about cash flow. So what is cash flow? Sounds like a fancy financial term. Cash flow is basically your income minus your expenses, the money that's left over. That's cash flow. Simple. Right? We get it. It's that extra. Yeah, it's that extra. It's that leftover. It's that mother's milk. It's that honey. That is cash flow. And it may be a simple concept, but if you have no money left over after you pay all your bills, then you are not going to have any money to invest, to grow. So income minus expenses equals cash flow. That's it. Now, your cash flow can be positive, your cash flow can be zero, or your cash flow can be negative. So let's look into first what goes into our income, right? So we said that the cash flow is our income minus our expenses, and what's left over is the cash flow. What goes into our income? Well, now for most of us, our income is our salary. Let me repeat that again. For most of us, our income is our salary. We've been miseducated. Okay? We've been miseducated to think that salary, we've been miseducated to think that income equals salary. For most of us, because we've been given that poverty or that poor mindset, income equals salary. But don't you know that income is any money that's coming in? It's in the word. Income coming in. Income coming in. Okay? So if you're a farmer and your farm is growing and bringing in the harvest, those fruits that are coming in that you can now sell is your income. There are other income. We've been miseducated that income equals salary. That's only one type of income. But we can have income from other sources, right? You hear people on YouTube all the time talking about 7 streams of income and 10 streams of income and all that stuff. So we could have income from rent. You could have rental income if you own a rental property. That's income. Right? After you pay all the expenses for the property, that extra, that's your rent, right? So we can have other income besides salary. You can have rental income if you own rental property. The tenants pay you money to live there. You use that, you pay all the expenses of the property, and hopefully there's money left over, right? So you can have rental income. You can have dividend income, right? We're talking on the channel about dividends a lot. If you own dividend stocks and they pay, some of them most pay every quarter or every month, that income, that dividend is an income. So we got rental income, we got dividend income. We can have income like from interest. If you own a bonds, the money that you're paid out from the bonds is called interest. You also earn interest when you have money in a savings account. Usually it's very low, but now we're in a high inflationary time and the interest rate are a little higher. That's income. You can get income if you have a property or stock that goes up in value and you sell it. That's called capital gain, capital gains income. You can get income if you write a book or if you have a song or something like that, and it's called royalty. That's royalty income. And some people have business income, right? So you can see that income does not only equal salary, but we've been trained or miseducated to believe that income, we think of salary, one source. No. So when you begin to understand that income can be different things, right? I have my income from my salary, from my job, but I take some of that extra, the cash flow, and then buy dividend stock, dividend paying stocks, which will then pay me income. Or growth stocks that goes up in value, I sell and I get capital gain income. Or I save some of that extra money and eventually buy a property. So you see how you can begin to start using your IQ, your financial IQ. So that's on the income side. What goes into our expenses? What goes into our expenses? Our expenses include where we live. So whether it's going to be mortgage or rent, insurance, our how we drive our vehicle, our car payments or our lease payment, our gas, um, and our food, and our entertainment. So these are the things that go into our expenses, right? So now let's look at someone with positive cash flow, which is kind of what we are aiming for. Person with a positive cash flow simply means that their income is greater than their expenses. Positive cash flow, your income is greater than your expenses. There's two ways you can achieve having a positive cash flow. All right? Either increase your income or decrease your expenses. I guess you can do both. But you have to increase your expense. You have to increase your income or decrease your expenses. With decreasing your expenses, cutting, there's a limit to how much you can cut. You can move to a smaller apartment. You can get a roommate. You can move to a smaller house. You can get a cheaper car. You could not go out and eat so often. You could not buy such an expensive vehicle. You could buy a used vehicle. You could not buy such expensive clothes. You could not go out to eat so often. You could not take such fancy vacation. So you think you can, but after you've done all those, then there is a baseline amount of money that has to be spent just to live and survive, which you can't go below that, right? But your income, there's no limit, right? There's no limit to the income you can generate. You can have, first of all, you can increase your skills so you're more valuable in your job, more education, more training, more certifications. You can leave your job because they say, after 3 or 4 years at a job, you can leave and then you'll probably get a higher salary as opposed to staying with the same job, right? You can have 10 shares of a company and you'll get a certain amount of money. But then you can buy more shares. When you have 100 shares of that company, you get more money. When you have 1,000 shares of that company, then you get more money. So you can see, or when you have one rental property, you get so much money. But now you have 4 rental, so you can see how there's no limit to the amount of income you can generate. So with a positive cash flow, the benefits of having a positive cash flow is that you have all that extra money after your expenses, and it's just sitting there, and that's money you can use to invest. Now, that's money you can put to work, whether it be in stocks, right? You can invest in index fund. You can invest in an ETF, right? And you can grow that pot of money. You can save up and buy a down payment for a rental property, investment property. That is money That's fuel for your fire that you can use to grow yours and your family's wealth. That's money you can put to invest for your children's education in the future. That's why cash flow is important. Now let's look at cash flow of zero. Income and expenses exactly match. There's cash flow of zero. There's nothing left over. You can't do anything. If you're in that situation, you're gonna have to cut your expenses, like we said before. But if you've done that and you can't do anymore, you're gonna have to increase your income. You're gonna have to get another job for the short term, but you're going to have to get another job or increase your skills, your training, your certification to increase your income. So some of that extra income that's above your expenses can be used to invest. And we can start the snowball working. See, when you're in a cash flow of zero, you may be very comfortable. A lot of us are in that position. So let me hit that for a minute. A cash flow of zero, a lot of people are in that position and they'll say, I'm doing okay. I'm doing all right. Because I don't owe anybody. I can pay all my bills on time. And they're getting month to month. They are moving. They're surviving. But is that all you want to do? Is that all you want to do is pay your bills and survive? So it can be a very comfortable place with a cash flow of zero. The bills are paid. You're making money, but you're paying everybody else, but you're not paying yourself. So do not get lulled to sleep in that position with a cash flow of zero. You deserve more. Initially, it's going to take a little effort and energy to move, because I know you're tired. I know you know I've done what I'm supposed to do. I'm working, but you need to push a little more. Get that part-time job. Get that side hustle. Get that side gig going, so you can get that extra money to invest and start the ball rolling. And I promise you, when you start seeing your name, your account number, your dividends, your stock, your portfolio, you're gonna say, "This is what I deserve. I deserve this." Now, let's look at someone with a negative cash flow. You can say, "How's that possible?" Well, a negative cash flow, as we've said, simply means that your income is here, but your expenses are here. As the old folks would say, you're living high off the hog. You are living beyond your means, right? If your income is $5,000 a month, but your expenses is $6,000 a month, that means that means you have negative $1,000 cash flow every month. And you can say, how how can they how can this be? How can you spend more money than you have? It's called a credit card. It's called a credit card. That's how you can spend more money than you have. Your expenses are beyond where your money can take you. So you borrow. That's what a credit card is. The credit card company pays the bill for you. They charge you an exorbitant rate. You pay the minimum payments and a lot of interest. And that $1,000 per month at 20% interest, it'll cost you $1,200. And depending how long you paid for, it may be more. So, what did that person do in a negative cash flow? One, they have to look at their expenses very critically, and they need to be serious. They need to be diligent, right? And they need to take action. They need to cut everything that is not required. They need to cut. So they may look and see, we're going out to eat too often. Cut. These vacations are too expensive. Cut. This car is too expensive. Cut. That's how you begin to rein in your expenses. Obviously, the other thing you can do is try to increase your income. What I don't want is for you to increase your income by working overtime and a second job, only to give it to liabilities. If you are going to increase your income by working more, I want you to put that money to assets. not liabilities. Again, God, MD Investor, trying to increase our financial IQ so we can teach our children and break the cycle of generational poverty. If there's people out there that could benefit from this, send them the link. I would appreciate a subscription. And until next time, continue to command your money to grow.